Well, one thing I wanted to have available in one place for you to have as a reference tool. So I'm not going to go in detail over everything. So no fear, you will get out of here maybe a little bit earlier than 4:15. Don't get your Hey, I heard that back there. No, we will just concentrate on those areas that I want to highlight for you, but I also there was a lot of new legislation, and I mean, for a long session, there was a lot of new legislation. Usually they focus on a couple of really key items, and this time while I was going through the laws, and I could show you, and this just pertains to you all, it's this thick. And that's not copying all of the budget bill, okay? And I was like going through this and I was like, oh my goodness. I mean, just for my own self, I wanted to have it organized. And then there's stuff in here that I didn't put for about the treasurers and the clerks, and wow. So there is a lot to absorb this year, and at least you'll have it kind of in one place, and you'll be able to go, oh, okay, I know that we kind of talked about that, or Debbie mentioned that, or something like that. So let's go ahead and talk about that. And also the complete new ledge from our perspective will be in our digest in July, so there will be another opportunity if you really care about what the clerks are doing and those other parts of the county government, so it will be in there. Mobile homes, I know you don't deal really, that's more the treasurer's thing for mobile homes, but it is on the duplicate and things like that. And the reason that I kind of brought this up is this happens to deal more, of course, with the treasurer, but I just want you to have this in here because who does everybody come to when they have questions? The county auditor. You are supposed to know it all, so we'll give you some more knowledge. The only change on this is that when it comes to a permit issued by the treasurer, that it expires 90 days after it's issued. Before, they didn't really have a time limit on that. This is when that you have a property owner that has an abandoned trailer on their lot, a mobile home, and they're going to sell it, and there's process for them to do that, and that's what this really gets into. But what I want you to really be aware of is, because the notice is sent to the treasurer when the county treasurer, when it's sold, but the big thing is the distribution of costs, and this is kind of what you might be interested in, because when that homeowner sells it, they can retain reasonable attorney fees, amounts owed to known creditors, and then taxes. So it isn't taxes first. A lot of times it is taxes first and then to everybody else. But in this particular case, it is not, so that you just know about that. Okay. I looked at this, and I know that there are times when there are conflicts for the coroner. I get that. But I was like, really? If the coroner kills somebody, do you think that they're going to give it to the other county to do a review on? I don't think so. I think they're going to keep that in-house. But when they believe that there is a conflict, I'm sorry, I did have to say that because somebody was joking with me out there about it. So anyway, I know there are some very serious conflicts. And when it does, they do have the opportunity to recuse themselves, but when that does occur, then the county does have to reimburse the other coroner for the costs involved. Wow, that made a difference. Internet tax. This is essentially telling the county, and it is effective upon passage, which was 4/23/15. This is basically saying that you cannot impose and assess, collect, or attempt to collect a tax on the internet access or use of internet access. So this is not one of those items like the old 911 where the ordinance could be passed and there could be a tax placed on phones and things on the internet. This cannot occur, and of course for 911 that doesn't occur anymore either. Sheriff's Service of Process fee. This is just for you to know that there is an increase. This does go into the Sheriff's Pension Trust Fund if that is available. If you do not have a Sheriff's Pension Trust Fund, then it goes into the general fund. But effective July 1, 2015, the amount will increase from $13 to $25. Courtney talked about the controlled project, so I won't really go over this. It does, the portion about the whether that they are improperly artificially divided, that really is something that you will be working with DLGF about. Now the annexation, Courtney talked very briefly about, but we play a little bit bigger of a role. It impacts many statutes, and it is very legal in nature. So if the county attorney isn't already involved from the start, they need to get involved with it. I'm sure that the municipality, will have theirs involved, but the county attorney also needs to be involved in it. There are some differences when there's a redevelopment involved or if the property is assessed as an ag land, which Courtney went over. If there's infrastructure involved, capital improvements that comprise things like a sanitary sewer system, water treatment facility, a building, a park or recreational facility, road, street, and highway. Those kinds of things, if there's a debt evidenced by bonds or leases or other obligations that are outstanding on the infrastructure on the date that the annexation becomes effective, and the outstanding debt is payable from property taxes or revenue bonds or obligations, annexing the municipality will assume ownership or partial ownership of the infrastructure. If they do that, then the municipality will reimburse the county for the appropriate share of the remaining debt that is payable by the county from those property taxes or revenues. There should be an interlocal agreement to this effect. Under IC 36-1-7, which is for interlocal agreements, so you would be following that. If local income tax has been pledged by the county to pay outstanding debt on infrastructure to offset the change in the local income tax distribution that will occur after the annexation, annexing municipality is liable to the county for reimbursements in the amount that represents part of the outstanding debt on the infrastructure until the debt is fully paid. The amount that the municipality is required to reimburse the county is the percent of the total county income tax distribution that is indebted, multiplied by the amount of the local income tax revenue for distribution of the year that is shifted from the county to the municipality. I'm having really trouble with that word today. Should I just say city and town and get it over with? As a result of the annexation, and reimbursements received by the county under this section should be deposited into the appropriate debt service fund. let's see, remonstrance. Usually I don't pay any attention to annexation between units of government, but they've involved us, so I gotta. Annexation, for which an annexation ordinance was adopted after June 30, 2015. If certain requirements are met, the annexation may be appealed by filing with the Circuit or Superior Court of a county where the annexed territory is located, the signed remonstrances filed with the county auditor. So you get a nice part to play in this. They'll be filed with you. The county auditors you will certify, and the annex ordinance will also go to the court. So those three items, the actual remonstrance, the certification by you, and the ordinance, and then there's also a statement of the reason why the annexation should not take place. The remonstrance must be filed with the court not later than 15 days after the date the county auditor files the certificate with the legislative body. So for those of you where the county executive is not the legislative body, that's why I'm going to use that term, because I know most of the time it would be your county commissioners, but for a few of you, that's not the case. After a remonstrant petition is filed with court, any person who signed the remonstrance may file with the court a verified written revocation of the person's opposition to the annexation. So somebody can change their mind. It adds IC 36-4-3-11.1. The annexing officers must give notice of the remonstrance, and it talks about the process, what they have to go through. And they give this notice to the clerk's office and not to you. I don't know if they meant it to be that way. I think you should be informed of it too, because you obviously play a big role in it. I think a lot of the language and the process that they are dealing with seem to be somewhat taken from a controlled project remonstrance. So I think that maybe they might modify this a little bit, but hopefully your clerk would notify you if this is going to occur. The notice is sent on the same date that the notice of adoption of the annexation ordinance is published. And then it does give exactly what the remonstrance notice must state. So, and it basically tells them that they've got, that people have the ability to remonstrate. This information is important for you to know, because this will be information that you'll end up inputting into any remonstrance forms that you might have to deal with. So that's why you need to know about it. It adds IC 36-4-3-11.2, which goes into who may file it, and it can be filed by an owner of real property that is within the area to be annexed and was not exempt from property taxes for the immediately preceding year. And then to be effective, a petition each signature must be dated, and the date must not be earlier than the date the forms may be issued by the county auditor, the address of the real property owner owned by the person to be annexed, and it must be verified in accordance with IC 36-4-3-11.2E. So if you get one of these, it'll tell you how that you must verify. We come into play with this because of the forms. We are in the process of developing these forms, and we will have them ready by July 1. If this were to occur, this is very, very similar again to a controlled project, and we will actually be using that as kind of the prototype of what we utilize for these. You will need to come to us, and then we will distribute to you upon request. The reason we do this, and it's just the same as with a controlled project, is the laws change. And so you don't want to be using forms that do not meet the legal requirements. We will have a list of the instructions that you give out to the person who's circulating the petition. It'll be the same thing where we have the actual grouping of petitions, but the whole package makes the whole petition. So it'll be very, very similar for those of you that have had to live through a controlled project. When we get those forms developed and everything, we'll probably go through them this fall very quickly for you so that you are familiar with them. But again, what I would definitely say when it comes to this is make sure that your county attorney is involved with this from the very beginning, and that you request the form from us. If you don't use a form, even if you just got it 2 months ago or something like that, don't use that form. Contact us to make sure that that form is a valid form to use. Surety bonds. There's been some changes here. It amends IC 5-4-1-5.1, and it's effective July 1, 2015. And guess what? You get a very active role to play in this now. The official bonds now will be filed with the fiscal officer of the political subdivision in addition to the county recorder. For the recorder, they always file with the clerk, but they will also file with you. You will then be filing with us when you file your annual report. This is to make information available about the bonds. We're in the process now of figuring out exactly how that'll work, if it'll be a scanned copy that you file, or if and that's really about the only way I can think of it going, but it could be that there's some checklist or something that's added in. But we will go over that in the fall with you about what you'll need to do for your annual report. It'll be one more thing that's been added for that. They've also added that surety bonds are now also required of employees or contractors of the county whose official duties include receiving, processing, depositing, dispersing, or otherwise having access to funds, and that they're not already named as requiring a bond. So essentially, they want to make sure that everybody who's touching money, and we've always made that recommendation anyway, but that anybody that's touching money has bond coverage. And the bond in this case must be at least $5,000. And of course, the fiscal body can have a blanket bond, and as long as the aggregate, and by that I mean that for each one of the employees, say like the worst happened and everybody stole all at the same time, your insurance should be able to cover that. Because I know a lot of times we'll get the question, well, the auditor, the clerk, the treasurer are listed on the blanket bond. Can we do that? You can do it. Your insurance company needs to make sure that they are in compliance with the law. I'm not an expert on how those things are written. You're not an expert. You need to ask questions to make sure that the coverage is proper and that they've pretty much made a statement in some way that yes, we do have proper coverage that complies with the law. I know also another common question we get is, should it be by name or position? The Attorney General's office actually prefers that it be by position and not by name, because if somebody leaves in the middle of the year or something, it makes it more complicated to get payment for the bond if it's by name versus if it's by position. This has kind of gone, for those of you who have been around a little bit, this has gone back and forth a few times. Currently, the bond coverage is for the 4-year term. This was changed from a few years ago where it had to be per year. Now it's gone back to per year. Unfortunately, I think we have had enough incidences that have not had adequate coverage in the recent past that the legislators felt that it was necessary that any bond coverage amounts be per year. So we have gone back to that. And again, there's no stacking to that. And stacking is a term that they use when they're like, okay, we'll just extend, you get the bond coverage year 1, and now we're going to extend it to year 2. Well, you got to make sure that year 1 is for $5,000, year 2 is for another $5,000. Because if the worst does happen, that's what you need, because sometimes when these unfortunate events happen, it'll be over a period of time. And so if you hear that term stacking, make sure that they are going to give you that coverage for each individual year. Reporting of government malfeasance. There was kind of a theme this year, unfortunately. An individual may report suspected malfeasance, misfeasance, or nonfeasance by public officer to State Board of Accounts. And of course, they've always been able to do that, and believe me, we have had our share of phone calls about that. But now the person's identity is confidential unless there's a court order. I'll have phone calls and somebody, rightly so, they don't want to have somebody come against them, and they'll be like, can I keep it confidential? And I always have to be upfront with them and say, well, I'm not going to just go tell everybody, but there is not a confidentiality law on this. Now this makes it very specific and says that we do keep it confidential unless there's a court order. And it also is very specific, and that there can be no retaliation against that person. Now, don't confuse this law with IC 5-11-1-27, and that's where you report to us anything, where there's reconciling issues, where there's money short and things like that. So these are two separate items. Abandoned or vacant buildings, there was a lot that went on with this. And you can read this for yourself, and you should read for yourself. Most of this was retroactive to January 1, 2015, so there was obviously some issues because last year and the year before there was some laws passed in regard to vacant or abandoned buildings. But now it specifies that there must be delinquent property taxes or special assessments before it may be sold as an abandoned or vacant building. And it specifies that the treasurer, not the auditor, is to auction the property. So you can take away that. Okay. And I'll just highlight this, that when the minimum sale price is not received at the sale of an abandoned or vacant property, the executive that certified the property, and it could be the county commissioner, but it also could be from the city or town too. They also may certify it. They may request that the auditor execute and deliver a deed for the property to the executive. And that request must be delivered within 6 months of the date of the sale. And this is something because we are always asked about waiving penalties. And so under this circumstance, this is one of the very few circumstances where the county treasurer may request that the county auditor waive penalties incurred after the proof of claim is filed, and the auditor may waive such penalties. So if somebody's asking you about this, I just want to alert you to the fact that here is a place where the penalties can be waived. And then there's a whole new section on property that is not suitable for tax sale. This is going to be initiated by the county executive, and they can certify this to you. This really has to do with unsafe buildings or if there's hazardous materials, and it has to go through court. But this is another option where the certification in the tax sale is applied, and it's really separated out from any tax sale once it's gone through that court process. And then the county executive can dispose of it however they wish to. And if they do it within 3 years, though, then they're going to have to apply it to property taxes just like you would for anything that's sold for tax sale. So you've got to keep track of that property. And then there's some additions. It amends IC 6-1.1-24-5.1 about the person who's not eligible to purchase property at tax sales. So it refines it even a little bit more. We're kind of used to changes there, but this is so that you know who can't actually purchase. Okay. Assessor salary. It's the intent that there not be a reduction in the annual compensation due to the repeal of IC 36-2-5-3B. So that's really why they've gone through all this rigmarole. Basically, what they're getting down to is the fiscal body shall have a salary schedule in which the salary of a county assessor who's attained a level 3 certification is at least $1,500 more than the assessor with a level 2, and for a deputy assessor at $500. If the level 2 assessor attains a level 3 not later than January 1 of the 3rd year of term, the assessor is entitled to be paid the salary of a county assessor who has attained a level 3 beginning on the date that the level 3 is attained. So it makes sense, but they do, and that's of course because there can't be a change in salary, and so it wouldn't make sense at the end of their term to be able to give that to them. Beginning January 1, 2016, the 1,000 additional annual compensation for level 2 or 3 assessor and 500 for the deputy shall be paid as part of the annual compensation. It's not that it hasn't already. I mean, we know that they have to be paid as just like you would any other compensation, but now they're actually integrating it in as part of the compensation instead of this separate amount. And I got a feeling I'm going to have a couple of questions on that, but that's okay. See, Mike Duffy is going to be talking about this tomorrow. I'm so grateful to him. He's taken the lead on this, but this uniform property tax disclosure form, which looks like it can be used for property tax exemptions, deductions, zoning, building permits, a whole bunch of things. He's already been working on it. He's actually already created it. It's going to be available online for the basics. Okay, because you're going to have to modify it to meet your needs, but they want DLGF and SBOA to have input into it if you wanted it. And so we've tried to be a little bit proactive there and gone ahead and created a base form that then you can modify to suit what your needs are for these kinds of documents. Courtney talked about this today for large property tax refunds, and I know that this has been happening in the last couple of years. We've had many situations where there has been an appeal that's gone on for long periods of times, and we're not talking about $1,000 or a couple of thousand. We're talking hundreds of thousands of dollars that these people are owed. And under this current law, it's like, okay, you can take it to the next installment and then you got to refund them their money. And they're like, where do we get this much money from? And then it affects all of the units that received it. So this is allowing a spreading out over the period of time for these appeals. So I can't remember, how much was the largest one that we've had? 3 million? Yeah, so it can get pretty hefty sometimes. So that was the intent behind this law. This is just to make it a little bit easier. If property's not sold at the initial sale, you can omit certain descriptions. So in the notice there's a statement that as long as you have a notice in the statement that the description is available upon request. So makes it a little better. This is, there's about 3 new funds that will be impacting the chart of accounts, and we will get those fund numbers and the funds out to you here in the next month. One of them is the one that Courtney was talking about, the assessment, and of course that's not viable until January 2016, but we know that you want to get all of this in with your vendors as soon as possible, so we will be updating the chart of accounts for these. And this is just talking about Department of Revenue will be distributing certain monies if you meet certain requirements. And it is for emergency response planning, information about hazardous materials and training, and equipping hazardous materials response teams. So it's for a smaller amount of money, $2,500, but there is going to be a statutory fund associated with that. Access to vendors. I don't think that anybody has ever said, no, we can't talk to your vendors or we can't work with your vendors so that we can get the information. But one of the things that I talked about this last fall, we have now a data analysis group. And the data analysis group, for part of our risk assessment, is gathering information, and this enables us to directly work with the vendors in order to get that information and get it sent directly to us so that we can do our risk assessments and determine what areas really need to be audited. So it's one of those ways that we're trying to be more effective and efficient. This is something that really involves your treasurer more than anybody else, but in the past, people have just been netting their bank fees against any interest. Of course, nowadays we don't get very much interest, so it doesn't really matter as much, but technically the correct way was to, for the whole bank fee, was to have a claim go through your office, and all of the money that they earned would also be shown as miscellaneous revenue. This is just catching up with what happens most of the time, which is they only tell you the net amount of any interest that they're receiving, and quite frankly, they're probably not getting more interest than they are bank fees. This for your tax sale list mailing, and this is effective January 1, 2016. And the part that's been added to the certified mail, it has to be with return receipt request, so that you know that. Oh, this is interesting. This is serial real property tax delinquencies. So after a treasurer certifies the list of real property for tax sale, if the county executive reasonably believes that 10 or more of the properties on the list are owned by one person or a group of people, they can petition the court for finding of serial delinquency. And if an order entered of serial delinquency, then the owners do not have right of redemption. So, takes away that. And then the county executive can dispose of in any lawful manner. The court order will be sent to both you and it will be sent to you, and then you will remove it from the tax sale list. So, and this can also be the executive of a city or town that can make this petition with the court too. And again, they can sell it in any lawful manner, and if they do sell it within 3 years, then the distribution is to the taxing units for the cost, just like it normally would be, versus having it as surplus property, which then it would go into the general fund. So if it's sold within 3 years, there is that caveat. This is just an information. I'm never going to get used to this new name, but Public Records Commission is changing their name to Public Records, from Public Records to Indiana Archives and Records Administration. And also now you can send somebody, when you have your local records meeting, you can send somebody in your place from your office. So, and this is effective July 1, 2015. There was also a change when you're sending the notice. In addition, that it has to be return receipt. it goes to the mortgagee and purchaser under an installment land contract recorded in the office of the county recorder. So, and that does make sense because somebody who's under contract and they're trying to purchase this piece of property and then the property owner doesn't, you know, pay the taxes, they probably kind of like to know it. See, notice of tax sale by certified mail, return receipt, and by first class mail. This all said, and that it goes to the last address of the owner as indicated in the transfer book. Before it just said the records of the auditor. It takes out that the county auditor shall mail a duplicate notice to the owner of record by first class mail to the owners from whom the certified return receipt was not signed and returned. And also took out that the auditor may determine that the mailing a first class notice to or serving a notice on the property is a reasonable step to notifying the owner if the address of the owner is not the same address as a physical location of the property. And then finally took out that if both notices are returned due to incorrect or insufficient addresses, the auditor shall research the county auditor records to determine a more complete or accurate address. So they've been just a little bit more specific. Instead of you running your wheels off about this, they're giving you a little bit more authority about determining what's reasonable for you to do. They also amended IC 6-1.1-24-5. It takes out that the sale must not extend beyond 171 days after the certified list to the auditor. That's no longer there. There's changes to the statement that bidding person must sign at tax sale. Indiana law prohibits a person who owns delinquent taxes, special assessments, penalty, interest, or costs directly attributable to a prior tax sale, and the new part is, of a tract or item of real property listed under Section 1 of this chapter from purchasing the tracts or items of real property at tax sale. And then they also changed, in the event of foreclosure, the amount by which the bid exceeds the minimum bid on the tract or item or real property under IC 6-1.1-24-5E. So there's just a couple of changes to that. Here, and I know several times we've even got the question, there's tax sale surplus money, what about if there's taxes after the sale has occurred? This does allow that if they come due after the tax sale certificate is sold and during the period of redemption, that you can utilize that surplus money for those taxes. But you need to, now there's going to be additional record keeping for that. So keep that in mind. And also they've added in there about the federal bankruptcy law. Before, after 3 years, it would go into general fund, and that kind of ignored the idea that there could be extensions with bankruptcy. And so now it clarifies that if there is a bankruptcy involved and it extends beyond that 3 years, then it has to be kept in the surplus. So Courtney talked about this part of Senate Enrolled Act 567, so we won't really go over that. I think Paul really talked about this a lot this morning. We do understand, and I've had some discussions out in the hallway about this. Paul is very serious that if you are having issues with one of our field examiners, we need to know it. Nobody is perfect. We all understand that. There are always issues. But if you have some serious concerns, then please, you can contact the board directly. They are more than fine with that. You can contact Lori or myself. You can contact even the audit manager, because now, as you know, we have the field examiners, we have the managers that are on audit, and then we have the coordinators. Coordinators are really the ones who have to deal with administrative type issues. But at this point in time, I know that there's confusion about who has what role. Just let us know if you are having any issues. We know that when it comes to raising the money like this, that the responsibility goes both ways, that you be more efficient and more effective about getting us those records, but we have to perform efficient and effective audits. And that's part of like the data analysis that I was telling you about. We are trying to zero in on where the issues are, and so that we can perform audits that address fraud needs along with opinion, getting enough information for us to express an opinion on your financial statements. So, one other thing, I don't know that everybody does this, but audit costs are chargeable to your federal grants. And so if you are not doing that, you might be getting overhead administrative kind of costs from your federal grants, but you might not be incorporating this as a cost. So it is an allowable cost, and you might want to talk with your grantor agency about that to make sure that you're incorporating that cost in there. This went into a whole area where you can go outside of us and get an audit from another party, but it is very, very specific about what you would have to do in order to do that. You'd have to have an internal control officer, an internal control department. You would have to request it in writing from us. And then you could have the CPA firm come in and do the audit instead of us. It has to also be a resolution through the legislative body. But one thing to remember about that is that we have to accept that audit once it's occurred. And if they have not performed to the standards and regulations that we have, and there are certain compliance steps that we require of our own auditors and we would require of them. So if they don't perform those, then we can disallow that audit, and then we will come in and do the audit, and then we charge full cost for it. So it's not a threat or anything, it's just so that anybody who wants to go that direction, the law was allowed to have that happen, but then I also want you to be aware of the repercussions. And then also, and this is not something I want to start doing, but if you contact Lori or myself and you've opted to go with a CPA firm, or any kind of technical advice that you would get from us, then you would have to pay full cost to us, and then we'd have to start writing these journals, and then I can't ask you how your family is and things like that. So. Paul talked about this again, and I've already mentioned it, where we'll be doing risk-based approach, and that's really where our data analysis people come in. And I want to mention one thing about our data analysis people. When they request information from you, it's just like we are auditing out there. And I don't mean charging, because that's not a part of it. It's that we need those records so that we can do analysis. Also, we might be looking at certain things above and beyond, apart from your audit. Maybe we'll want to look at sheriff's reconcilements for the inmate trust, or different kinds of items that we might not look at on the audit because it doesn't fall under the risk for your financial statement audit, or it was not one of the compliance steps, but things have come to our attention as a whole that there's an issue out there, and so we want to gather that information to do an analysis on. So just want you to be aware, right now Eugene West is our data analysis person, and Charlie Pride Jr. is his supervisor in that area. So if you ever get any emails from one of those two people, then please cooperate and give them the information that they need. And of course, Paul did talk about when an annual audit is required, and you guys are just normally, with the very, very few exceptions, and even for those 4 or 5, I dare say that you'll end up with the annual audit. But federal requirements, when there's a federal financial assistance, that's almost for all of you that you'll meet that requirement. Or if there's something like a public bond issuance that's requiring it. So most of the time, you guys, I really can't think of a time where you're not going to get an annual audit. And one thing too, with this risk-based approach, that Paul is really stressing is that he doesn't want to come after people. What he wants to do is he wants to change the behavior of everyone so that we all have accountability. So that's really what this is about. And where it's lacking, sometimes it's just misunderstandings, etc. And so we want to correct that behavior, and we want to be able to focus on where it is weak at so that we can help strengthen it. And so then in the long run, we all benefit from that. Another big change, it might not seem so big to you, is all examinations by SBOA may be made without notice. Before, it was required that we give you no notice. Even though I know that probably your field examiner would at least call a day ahead of time or something like that to say, hey, I need some place to sit. I'm going to come in. But now we have more flexibility. We still have to have the ability not to notify, because if there's an issue going on and we need to come in and we need to grab records or whatever, the law still allows us to do that. But we also now can work with you legitimately now to get a place to sit and to say, hey, we need these kinds of records, that type of thing, a little bit more ahead of time. This has always been the case, but now it's actually in the law that you can request that an examination by us be according to GAAP. And of course, we know GAAP is really a big thing, and it's going to become a bigger thing. But you have to make the request, and then we have to approve or disapprove it in 60 days. The thing is that your records have to be maintained on the GAAP basis, and your financial statement has to be maintained on the GAAP basis. We can't do the compiling of the financial statement for you on the GAAP basis, because that takes away our independence. So, but we will be happy to audit on the GAAP basis if you wish to, and your records are maintained that way. This other part, it was in the news. I know many of you might have heard about where the exit conference we had was recorded and then given out to the public. And, you know, I do get where sometimes people feel the need for everybody to know what's happened at our exit conferences. But also, everybody needs to understand that these exit conferences, the findings that we have, they are not the final product. That is part of the process to get to the final product. There are times where a finding might actually get to our office, and after we get some additional information, there's a determination that there is no finding, okay? Or at the exit conference itself, you provide additional information. And then we do a little more auditing and we go, okay, no finding. We don't want that kind of information out there to the public. It's not public, it's between us so that we can work this through. And when that occurred, there were things that were made public that ended up not being a finding. And so that can hurt careers that should not have been hurt. And basically, it's the confidentiality between us and you, we take very, very seriously. So this law formalizes it now. So everybody's on the same page. It's confidential. Until we make it a public report, this is confidential information. This slide, people are probably going, huh? What this really was about is that sometimes people want to re-exit several times on an issue that is not going to change. The state examiner has said, this is what, we've got all the information we could possibly ever get. People want to come and talk about it again and again and again. And so this is basically to say, well, okay, we will keep talking to you. We've already told you it is going to become part of a public report, but now you're costing money, and there is no more new information to be had. So it has happened in a few cases, and so I just want to let you know that's really what that's kind of about. So just a little bit more about that confidentiality and, of course, that threat of a Class A infraction. And it just goes into when it could be made public, because there's and who it can be conveyed to with the Attorney General and the prosecuting attorney. The people that you would expect would have access to this information. And that's another thing that I kind of like to say. I know a lot of times we'll be asked over and over again, well, when's this audit report going to come out? Or we know that there's certain information that you have, and yet it's not a part of that report. We consider everything. And there are times where we involve the FBI, the IRS, prosecuting attorneys. There's a whole gamut of people that sometimes get involved. And sometimes the conclusion is, by all of the parties working together, that there is nothing. And so if there's nothing, there's going to be no public report and there's going to be no comment. But rest assured that when we're notified of issues, we do look into them and we bring in the appropriate parties. But it just doesn't always, even though we all have, believe passionately in certain things that something is wrong, it might not rise to the level for a public report that we would issue. But if we have some concerns, believe me, we do contact other agencies about it. This is something that I think is a good thing, fraud hotlines. So you can have a fraud hotline so that an employee can report something like that to you without fearing repercussions about it. And that information is confidential except that it go to the appropriate authorities, and we are one of those appropriate authorities. Common construction wage, I think we've all heard about that. So we know that that's going away as of July 1, but if you've already got a contract that you've signed, it's still applicable for them. Also, for work by your own workforce, that dollar amount has been raised from $150,000 to $300,000. This is to let you know that for an election inspector who is taking care of more than one precinct, that they can be paid more in relation to other election inspectors based on that criteria. Internal controls, we will be discussing this quite heavily at the fall conference. As Paul said, I'm working on a manual, I'm working on a process. It's all up here. No, I've actually got stuff down on paper and everything too. But anyway, this is an important thing. We realize we want to get the information out to you as soon as possible. Remember that the part about the policy adoption and the training doesn't really take place for you until next year for your deadline. We have until November to get all our ducks in a row, but we're going to do that way before then. We have to get everything passed by our audit committee. So I can guarantee you Paul walks by my office daily. He'll make sure that I get it done. But for those of you who were here last fall, as kind of a preview, you might want to review that presentation that Tammy gave on internal controls. It is still on our website, and it is going to go down those same lines because those 5 components are nationally recognized. Control environment, control activities, monitoring, all of those, the risk assessment, those are recognized as what makes up an internal control. It isn't just the fact that you reconcile. That's a control activity, not the actual control process. So you might want to refamiliarize yourself with that because we will be talking about that. I will also be talking to your county council in June about that, and I will be talking to your commissioners in December, if not earlier, about this because they play a key role in the internal control process because it gets into the control environment about tone from the top. It doesn't just mean within your office, it means from those that are charged with governance, which would be your county council and your fiscal, your commissioners, and your county council and your commissioners. And so we want to get the word out to them. If you want to, as a heads up to them, tell them about that internal control PowerPoint that we have online, by all means do so. We're going to have many things in place like webinars on our website that your employees can view, but we can go over that in October. I just want you to know that that's going to be a big part of how our thought process is going to be, is thinking internal control, because you already do it. It's just that you don't really have it defined. Let's see. Okay, I am going to go ahead and let you go, even though we haven't gone over the rest. If there's a couple of more items that I want to specifically talk to you about, we can do that tomorrow. You guys have been really, really good today. And it's over a lot of tedious information, but I do appreciate. So go out, relax.